Friday, which means it is buy now, sell now, a Paathshaala day with Kunal Bothra, and we have him standing by with us at this point in time. A very good morning to you, Kunal, and this time the Paathshaala is going to be basically breaking down for us and explaining on the 6-step F&O framework that SEBI had released a few days ago.
Absolutely, yes, and I think that's been one of the reasons why you've seen the markets also behaving the way it has been behaving over the last few days. So I think it's very important to try and decode, what has been the nitty-gritties. So what we've taken is, the topmost 5 points from the, SEBI circular, and in that context, we've looked at the 3 scenarios where what was the current scenario playing out, what was the repercussions or the implications of that, and what this new scenario could probably bring in terms of a change. So the first and the most important point which we had seen was the upfront collection of option premium. Now, what was actually going on was that the options premium as a basket was collected on the basis of the accumulation of the brokers collateral with respect to the exchanges. So, but that used to result into wide variety of churn within the brokers brokers clients. So there could be offsetting of positions which used to be happening in terms of the respective clients, because that may not have been reflected in the broker's collateral position as in net off basis. So that now goes back to the client basis, and that's why the SEBI circular mentions that you are now looking at upfront collection of options premium from the clients or from the buyers themselves. The second and the most important point was the removal of the calendar spread. Now, what is calendar spread? When you're looking at 2 expiries, or when you're looking at building positions on 2 expiries, for example, on the expiry day of a current series, say for example the October series, you're looking at buying, say for example, a call option of the current series, and then you're trying to hedge it with the call option or with the futures sell trade for the next series. Both of these instruments, they behave separately, and we've seen that both of these expiries also may not be correlated. That's why generally what happens is that the margins, they drop down because you have 2 offsetting positions. That generally leads to more speculative positions, and that's why the mandate was to try and remove the spread options calendar spread from the options market, and that's one of the reasons why you might see a curb in terms of the speculative, because the margins etc. may not be taken as an offsetting position. So that's also one of the reasons why we believe that there could be a significant drop in terms of the speculative activity. The third and the most important point was the intraday monitoring of position limits. So what used to happen earlier was that the positioning used to generally take place at the end of the day from the exchanges. Now that is now changed to 4 times on an intraday basis. So if in case the broker or the client generally hits the upper end of the position limits, then they are only allowed to square off the positions and not to build more positions, even during the intraday kind of monitoring. The fourth point, which of course I think is a concern to all of the traders, is the size increase in the contract or the contract size increase for the new F&O lot. So earlier, the contract size was around 5 lakhs to 5 to 10 lakhs. That's now increased to a minimum 15 lakhs. Now, the good part was that many of the stocks in the current scenario, in the current market, since the markets had run up, the lot sizes were on an average 8 to 10 lakhs, which means there may be just about a 50% jump in terms of the net positions or the net limits for the options or the contract size for many of the stocks. And the last point which we've discussed is the rationalization of weekly derivatives. I think this should bring a lot of ease to short-term traders, because almost on a daily basis you had one or the other indices which was going through an expiry, weekly expiry. Now the mandate given by the SEBI is that every exchange has to just about take one index and build weekly contracts for that index. So which means we could be looking at reduction of the number of indices which are going through a weekly expiry. So all of this is a process and as well as a method to try and curb the speculative activity and bring in more rationalization in the markets.
All right, so that's the motto or the motive behind SEBI's these directives of framework, also to make the entire stock market healthy, isn't it, Kunal? Because you have seen a lot of notes also. In fact, you have the SEBI study also that came out that you had a lot of people who actually lost in the F&O market.
That was one of the major reasons why this, the entire exercise was done, because, initially in the consultation paper, also I think most of the points have been taken. And the major reason for that is the data which had come out over the last 1 to 2 years, that the number of traders who have been entering into the market with an, very high leveraged kind of a play, and they are the ones which have been losing as compared to the, the algos which the data recently found out that the majority of the algos are actually making all the money where speculative traders are losing in the money. So I think that was a very fine context brought in by this regulator. And I think all of these points, and maybe few of the other points, if it happens in the near future, I think should probably help the markets being a lot more rationalized. When you try to curb the speculative activity, the volatility drops down. I think that brings in comfort for market traders also.
Absolutely. So that's exactly what the aim is of the regulator, actually, to bring rationalization and also make healthier and good standards when you invest in Indian stock market. So thank you so much, Kunal, for breaking it down for us, for explaining our viewers in this edition of Paathshaala exactly what the F&O framework from SEBI actually means and how things change actually with this sort of a directive. Thank you so much for that. But on that note,
there comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.